Hello traders, welcome to our another weekly analysis. Today is Monday, November 20th, and let's get started. Now, first thing first is that this is a Thanksgiving holiday, and that means the market is going to be a thin liquidity market. So starting from Thursday, officially Thanksgiving, but people will pretty much take off from Tuesday. Aside from that, let's take a look at economic calendar. As I mentioned in the last video, we don't really have much catalyst for this week. And even if we do, as many of you know, that the market right now is very geopolitical driven for a lot of major currencies. There's a lot of events happening in the world, and that really play a major momentum for the currency market or the financial market. So if you take a look at it, yes, we do have many central bankers speaks, but you have to put that into a context. Not much is going to surprise the market at the moment. Now that's sort of Monday ECB Draghi speaks. Now Draghi did made a little bit hawkish comment last week, but again, it's not really something that's materialistically gonna change the ECB policy. So we don't really expect too much going on. Now, a lot of people ask me, why did euro went up? Is that because of Draghi speaks or any fundamental news? No, euro went up was because all other currency dropped. So you see, euro right now is a neutral currency. The neutral comes from two sides. Fundamentally speaking, the economy for Eurozone had been quite well in a very positive year in 2017. So that's a bullish stance for Euro. The negativity comes from the central bank itself. Now, a lot of people, beginning of the year, the negativity came from German election, France election. All those things were very chaotic. People were very worried about another, French exit or German exit, things like that. But after the June, basically we'll have a rally in euro, and then it died down. So the rally, the uptrend and the downtrend, all because the ECB's hawkish and dovish stance. So euro right now really is a neutral currency. But you have to remember, euro and a lot of euro pair is the most traded pair in the financial market. Now, as I mentioned, this is a speculative market, so you do have to take consideration who are the players and what kind of pairs that they are most interesting to play with. So because of the dollar weakness, that's why we have the euro strength at this moment. So ECB Draghi didn't really make any surprise comment, and then later tonight we will have the monetary policy minute from Aussie. Now Aussie is also a neutral currency. I would say it's a little bit negative due to the sentiment. Right now, the RBA continue to be neutral. Now, this neutral stance in comparison with other central banks put them in a more dovish place because they're not in the rush to raise interest rate, and that automatically, put them lagging behind Federal Reserve and Bank of Canada, even Bank of England. On top of that, we have a new economist and a prediction. But before, people were saying that 2018 RBA should raise interest rate at least once. But right now, there's a lot of doubt over that. A lot of doubt is like, their economy is simply not picking up in a pace that they wish it does. So because of that, right now, 2018, people basically downgraded. They're saying that we might not see any interest rate hike in 2018 from RBA. Now, if that's the case, of course, Aussie will continue to lose momentum, but only to a stronger currency. Because you have to remember, Aussie still has a lot of underlying strength. It still has a pretty good yield. The commodity market is still well supported, especially right now oil rise up again to help Aussie. So I don't really expect too much coming out from the minute or any indicator for Aussie in a swing trade perspective. Now, you might have occasionally volatile movement, but from a bigger picture perspective, don't really expect too much happening. Then of course you have Governor Lois speaks. Tuesday we're gonna see UK inflation report. Now this will be more interesting, but as I mentioned in many weeks, right now the big momentum or big driver for UK or for the British pound completely lies down with the Brexit negotiation. People are sort of like ticking the clock right now, because although the deadline is next year, but December is the second round negotiation that they should basically come up with some draft of agreement, and that means the deadline is approaching next month. And right now we are in a bottleneck where everything's stuck, and the stocking point is because the money, which of course is usually the case, they're not agreeable on how much fee the UK should pay to the Eurozone. So that's the biggest challenge. Now, you might think it's an easy case that Prime Minister May can just add up the money. The thing is that Prime Minister May is not even in control of the internal politics for UK. Right now, she is very weak and vulnerable within her own party. So it's not a case like Japan, where the Prime Minister Abe has total control. He can really do a lot of things. So PMA is really in a very weak position, to go on negotiation table where everyone knows you're not even in charge with your own company. So yes, it sounds simple that UK can just pay up and then move on with the negotiation, but a lot of her own party members are going to use this opportunity to oust her or to weaken her political control. So there's a lot of complicated thing happening, and that's why there's a lot of uncertainty. For that being said, doesn't mean it's going to be a negative currency for British pound. As I mentioned, honestly, to a lot of members, it has been quite difficult for me to trade British pound, just because there is too hard to predict the ups and downs. In this sense, a lot of technical trader is actually doing much better, because when you don't have a clear view for a currency pair, then a lot of technical levels will become more important. People will simply play in the levels, right? So that's why, technical analysis definitely has its own strength. So I always advocate that you should use all, right? I don't never say that fundamental is better than technical. I think you should always respect both. But at this moment, it's hard to see exactly where the British pound is going, just because nobody knows how the geopolitical updates is going to be. So watch out for the inflation report. Now the census is that they are going to downgrade the growth for the economy. If that's the case, of course it's going to be negative for the currency and the country. However, once again, Brexit negotiation is going to take a more major into the British pound. Then we also have Fed Chair Yellen speaks on Tuesday, but the real Federal Reserve event is the FOMC minute. But honestly, I don't really expect much going on. Yellen, as I mentioned, is no longer the chair for next year. So right now her speaks are not that important, or the market doesn't pay that much attention, because the only thing that's matter is the next rate hike, which is December. And since right now everything is fully priced in, like pretty much the futures market is almost a very high percentage, 80-90%, confirmed that December is going to be a rate hike. And we also hear from a lot of central bankers coming out and say that yes, regardless of the low inflation, it doesn't mean we're gonna stop hiking the rate, because it's a gradual strategy basically. So there seems like they are going to hike the rate regardless. If that's the case, then the speaks and the minute will become not that important, because it wouldn't provide too much insight. And Wednesday, aside from that, you also have the autumn forecast statement. But as I mentioned, watch out for the Brexit. That's going to be the headline for British pound. Then you have a New Zealand retail sale. Now New Zealand, nothing much changed over the weekend, and it continued to be the weakest currency. Now you would think that the high yield or maybe a better data reading will save it, but I think right now, people are just not certain about the new government, and as long as that's the case, we wouldn't expect too much buying into New Zealand. Now, doesn't mean you should jump in and sell right now, because you look at all the NewZ pair, it's really at the bottom. Now I'm trying to sell NewZ myself a lot of time in the past. I just really couldn't get a meaningful retracement. But you know, that's my personal strategy, because I'm more conservative in this stance. A lot of people, they like to maybe be more risky in terms of this, in terms of the way they find in a retracement. There's definitely nothing wrong with it. But for me, I rather miss a trade. I really don't want to get into a shallow retracement. So you take a look at the NewZ, exactly same thing in a lot of pair. Even Aussie NewZ, right? Because Aussie is not doing that well, but even Aussie is still holding well against NewZ. What about, let's take about NewZ Yen, because Yen is a fundamentally weak currency, and also it's basically a carry trade to go for NewZ Yen. So if NewZ Yen is still a downtrend, it just shows you how weak NewZ is. Yep, let's go up 8 hours. It's just clear picture. So you see NewZ Yen is continued drop. So again, NewZ, although there isn't much catalyst happening, but because this new government, it's just such a strong sentiment, negative sentiment for the market to continue selling. Thursday, we're going to see a lot of PMI from Eurozone, but again, I don't really expect too much happening for Euro. Right now, it's just a neutral currency. So Euro itself, and over the weekend, we did have a negative news coming out from Germany, that coalition government, or the attempt to have that once again failed, and Germany once again remained to be without a government. However, it's not that big a deal if you look at the bigger picture. You know, I know you look at the headline from the news, seems that it's gonna play into people's mind, but for Eurozone, really, the worst has passed. You know, the worst is beginning of the year. You know, when Donald Trump got elected, a lot of populist movement coming up, but now it seems like that's not the case. So for Euro, it's really lies down to the ECB, and the ECB right now is not going to do a lot of drastic change. That means Euro remain to be a neutral currency, and in that case, if you have a weaker dollar or weaker pound, then euro dollar, euro pound will be a good pair to buy. Thursday, we're also gonna see a second estimate GDP from UK, retail sale data from CAD. Now CAD is still a strong currency, you know, for me, and you have to look at the bigger picture. All the talks among the central banks, you know, the only two central banks, okay, there's 3 central banks that really came out and hiked the interest rate. It's Federal Reserve, Bank of Canada, and Bank of England. Now, Bank of England is an exception, right? Because they hiked the interest rate due to the depreciation of the currency. So they didn't hike interest rate because the economy is booming or overheating. So let's not talk about that. But for US and Canada, they hike interest rate because the economy is doing well. So that means among all other major countries, Canada is pretty much in par with US, minus all the geopolitical crisis that US has, Canada does not have. That put it in a very attractive position. On top of that, if you look at oil market, right now it's still very well supported. Now I talked before that this trend or this sudden jump was due to a Saudi Arabia political drama. However, the real underlying supply and demand coming out this month, where the OPEC is going to most likely going to have another agreement to extend the oil output curve. If that's the case, going to be another strong support for the Canadian dollar. Okay, so that's really pretty much it for this week. I know really not much going on from the economical side. Geopolitically, you just have to watch out a few things. First, for US, the tax cut reform bill is not going to be voting again after Thanksgiving. So it's going to be after Thanksgiving. That means this week we're not going to see too much happening. However, again, as I mentioned, trading is about the expectation and reaction. So you will see a lot of people politically trying to interview a lot of Congress, especially the Republican Party, to see how many potential votes that the party can have. And remember, this is different when it goes to the Senate. They can only lose 2 votes. Back in the House, they can lose, I think, around 21 votes. But in the Senate, you know, a lot of times, like Obamacare bill, they were trying to repeal and fail is because they only have 2 votes. So if 2 Republicans come out publicly say that they are not going to support it, you will see a strong dollar weakness. So it's not, you don't even need to wait for the actual voting. It's going to happen just by this kind of comment and speech. So watch out for that. And of course, US dollar is going to drive the whole financial market. That's first thing. Second thing is the Brexit negotiation continues. So you do have to watch out for that. Third thing, basically just watch out the updates in the North Korea. And you have probably noticed there's a very strong safe haven inflow coming out from last week or the previous week. So right now, that's pretty much the case in a lot of yen pairs. So watch out for that. You know, that's the 3 major things going to drive the market. And if, one more for the US is, of course, the Russian gate investigation. This is really unpredictable. We don't know when it's going to come out. Of course, it's a special investigation, so nobody has an actual timeline. So we'll see, and that might surprise the market again. So that will really, once again, play the major role for the market for this week. And let me see what else. Let's quickly run down my analysis, see if I miss anything. Just give me 1 second. Okay, right here. So yeah, that's pretty much key events as I just mentioned. And Aussie, again, a neutral currency for me. CAD is a strong currency. Euro is neutral, but I'm interested for Euro dollar and or Euro New Zealand or even Euro pound, depending on what happened to a Brexit. British pound is neutral to sentimentally weak, but again, this is typed on Monday, right? So this can change any minute. So I have to watch out for that. New Zealand, it's a more sure thing. So you know, if you want to pick something that's a more sure fundamentally, I think New Zealand CAD will be a good pair to short, and Euro New Zealand will not be bad either. Other than that, that's pretty much it. You know, again, very short updates. Just follow through from my last weekend analysis on Friday. So that's pretty much it. Now I do think there are some interesting trade. I'm gonna send to the members as a trade of the week. It's pretty good for a weekly setup. So watch out for that if you are in my email subscribers. If you're not, you know, feel free to join. You will get this trade alert. And the most important thing is not a trade alert because it's just educational purpose. The most important thing is I will explain with another video lessons to the members only. Why did I take that? How did I manage, you know, both emotionally, financially, and what have I learned? I think that's the most valuable part about trade alert. It's just you get to practice from the whole complete process of how a trader takes a trade or manages a trade. Okay, so that's pretty much it. Thanks for watching, and I will update any new things on Twitter and Instagram. Okay, all right, thanks. Bye bye.